Dogecoin compound harmony. Is the price ready to skyrocket? Don't miss the train before it leaves the station. Your job is to maximize your profits, and we want to buy at the lowest, sell at the highest. We want to do it with high probability, and that's what I'm going to help you with today. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading currencies for over 15 years, featured in the best-selling book, High Probability Trading Strategies, back in 2008. But now I focus on crypto and blockchain. Love this space. So let's dive straight in. So last week, or a couple of weeks ago, we did a post on Dogecoin. We said, look, has the Dogecoin reversal been confirmed? And we said, look, got this movement to the upside, movement we should anticipate to the downside, and then the next surge. And that's what we're talking about, the next surge. Because the job is not to try and chase the rocket once it's taken off. Don't try and chase the train once it's taken and left the station. You want to ideally be prepared when it's not that noisy, when people are not talking about the project, or if the price is undervalued. As soon as it gets overvalued or starts moving, it's hard to make profits. So you want to be buying on corrections and on breathers, which I talk about a lot. So let's dive in first of all to Dogecoin. So we're going to do a lot today. So I'm going to be quite punchy, well, hopefully be quite punchy. So what we said with Dogecoin, just a quick reminder, if you see the video here, we said the same thing, bump wave one, wave two, and then this initial new part of the movement of the market. If we're looking at this from an Elliot wave standpoint, from a theory, is this wave one, wave two, and now this initial move to the upside, and it looks like we're making this initial wave one and this initial wave two. And crypto is brilliant because psychology of the markets is so infant, and it applies really, really well 50 to 70% of the time. So now what we're focused on with Dogecoin, I'm reminding myself I'm covering 3 coins today, so I'm going to keep it relatively punchy, is this part, and we're going to look at this part. This is what I'm referring to is at the station, right? This is at the station. Is this at the station? And then if you're going to buy Dogecoin, get ready before it leaves the station. Don't miss the train. I'm not saying buy, but I'm just saying this is the thinking that we want to do. So let's just jump into an hourly chart. First of all, let's just do 2 things. Let's just remind ourselves the weekly momentum in the top left is bearish. We're going to be aware of that. But the momentum on the daily is now bullish. So we're going to look at how time and price can help us with this recent movement to the downside. But the structure is not that clear on a daily chart. So we want to jump into, let's jump into we'll do an hourly chart. Yeah, it just helps us making much clearer analysis. Let's do it quite punchy though. So let's get rid of this. We're going to keep it like this. Hopefully this chart is the same chart, just with candlesticks, but we're focused on this part of the movement here. When is this likely to reach its bottom in the station, high probability, and then be prepared to, well, just do what you're doing. Hopefully helps you with your analysis, whatever your strategy is. So let's first focus on Fibonacci retracements. We're going to do a retracement on the macro. We're going to measure this low to this high. Typical corrections are 50 to 78.6%. Right, so that's this zone here. They're typically in 3 waves. So we've got this, looks like a first wave down, first leg, second leg, and now we're looking at this third leg of this whole correction. Let's just call it this one here. But we can narrow it down more now because we've got the information at hand. And this is all about getting the information ahead of time, leading indicators with clarity. Doesn't mean it's guaranteed, it's just high probability. So I'm saying that over and over again because some people just want guarantees. I go, you're in the wrong game if you want guarantees, I'm afraid. But there are different ways you can get more guarantees, but which I cover in my masterclass actually a little bit, or some of my courses. So this is time analysis to say, look, typical correction is done within this time period. What we're going to do now is just narrow this time and price down for this projection. Typical correction of a wave C. Let me just draw this out. I'm going to give myself 2 minutes, and then I'm going to move on to compound. Then I'm going to move on to compound. By the way, I'm trying to do more tokens and more coins in one video because, you know, there's a lot of requests, and I normally only do 7 videos a week. So I'm going to try to do 3 videos, 3 coins in one video. All right, this is what we're looking at here. A wave ABC, this is what we're looking at here. So we're going to measure this. Wave A, sorry, I need to get rid of this. This is, there you go. I just want to make sure we get the highs and the lows. We're going to measure this wave A. Typical wave C is 100% to a maximum of 1.618, right? And you can see there's these two real zones over here, right? But we want to get even more narrow, right? More narrow. What we're going to do is let's finish on this because I want to just give you a high level. I say high level. This is getting relatively detailed, but I think you'll find it useful. Is what I'm seeing here on a lesser degree wave count is a nice 1, 2, 3, 4, and it looks like a final wave 5 of a wave C forming of a wave 2. If I just, yeah, let me just do it like this. I can't help myself. This is one of my curses. Can't help myself but to give you the info. Let me know how you want this info delivered to you. Do you prefer it if I actually do the analysis like this, or do you just prefer to just get to the point? Get to the point, do the analysis before you press record, and then I can just go, boom, here it is. Here's my thoughts, guys. Done. And by the way, there's timestamps. There should be timestamps in this video. So if you want to skip straight to the punchline, which will be, you know, whatever the end of this is, it should be in the timestamps. But I deliberately do it this way just so some people find it difficult to get their head around if they don't know the method to the madness, and because we want to be making objective decisions on this. But let's just finish on this part here. I'll show you what I'm doing. Is I'm just going to project an end of a typical end of wave 5. So we're going to measure this wave here and project it from this here. And the most common end of wave 5 is 62% and 100%. So what we've got now is really, really beautiful, and it's quite narrow. We've got two zones. We've got this zone here, and we've got this zone a bit more broader. I'm going to keep it broad deliberately. And with Fibonacci price, or just price in general, what tends to occur more often than not is if the price goes beyond one level, it will tend to typically go to the next level. So last but not least, we're just going to focus on, past my 2 minutes up, and I need to get like a countdown timer so I can get a bit more punchy with these. But let's just measure this time. Boom, boom. Yeah, that's the time. Boom, boom, boom. Yeah, I reckon it's going to be this one. But what will help us is the momentum. So now we can go with the next bullish reversal. Let's just get, we got an ABC. Let's just see what this is with an 8. Yeah, I think what we'll probably end up seeing is next couple of days, momentum indicator will go down, and then on the next bullish reversal, that will coincide with this low down here, and then the market should go on to start its wave 3. So that's Dogecoin. Dogecoin, 1 down, 2 to go. All right, so just to confirm, Dogecoin looks like it's pulling back, finishing its final part of its wave C on an hourly chart. I'm trying to do it in a snapshot way because I know sometimes you guys are watching this on your phone and the numbers are not that clear on the phone. But we're basically saying this A, B, C, and we're saying we're in the time zone, and the minimum price we should anticipate is 26 cents, and the absolute bottom 13 cents. But it's likely to be in the range of the 26 to around 25 cents. Today's price is 27. So I think we're close to the low being made. In fact, let's just do one last thing. Let me get you this up. Okay, that's that. Let's just see if that works. Yeah, it will probably coincide with this reversal here. This is a slower indicator. But if you just look at these lows, this low and this low, they marry up quite nicely. So we'll probably anticipate move to the down, and then when the blue line crosses over the red, the momentum changes. That should probably coincide with this particular low. And that will be Dogecoin. So this is my update for Dogecoin. I said, look, is the price ready and set to surge? If it is, we don't want to miss the train. So if you're watching this before it surges, it allows you to make informed decisions. And what will be the first confirmation, the indication that the reversal has occurred, is the price going above this point. The price going above 29 cents and closing above that price. And then the next bigger indication would be above this point, and then the confirming one would be above this point, right? Which would be the previous one high. Dogecoin. All right, let's see if I can do a better job, a bit more pacey with compound. So compound, we did an analysis on I said to drop to $200, so we should anticipate a correction. So there's a couple of things with compound, right? We need to take into account, which is not obvious if you're not trained. Is the first thing that we said in the last video, or one of the things is, we want to be aware that even though this correction, it hit the price zone, it didn't form the typical pattern. It's very impulsive to the downside. So we should anticipate a correction up and then a third leg down, right? A third leg down. So now we're going to look at what's likely to occur next if this is the case. So let's just quickly get a reminder. The weekly momentum is bearish. We know that. That's great. We said in the last video it's likely to go down, right, from this point. And we pegged it quite nicely because if you look at the price now, if we just get rid of this, we just zoom in here, we zoom in over here, we can see that the price pretty much, it had a fifth wave failure. This is called a fifth wave failure if we consider it as a fifth wave C over B in this zone. But it hit that time zone and now we've got this movement to the downside. So it doesn't seem very impulsive. So we should expect a bit of a bigger move to the downside. But what we should anticipate is this here. Because it looks like 1, 2, 3, 4, 5. Yeah, it might be more like this. Now that we've got a bit more information. If that's the case, we've got a question mark here still, is we've got to move. Let me just move this. This is. There we go. I'm just cleaning this up from the last analysis. Right, then we've got this move to the downside, and it's not really clear, but what we should anticipate from the move to the downside is 1.618. I'll tell you what that means in a second. Yeah, so what we'll find is this is like a wave 1, a wave 2, what looks like a wave 1, 2, 3, 4, 5 happening with a wave 3. So this is like the first leg of this correction, or the first count of this correction. 5 wave down, we'll probably get a bit of a move up, move down, and then a further move down. So high level with compound, right? What we want to be very aware of, let's just look at the daily momentum. Let's just see if we can get a cleaner momentum indicator. This is quite choppy. Yeah, so we want to be aware that we might get sideways to up, might be more of a wave 4 forming, and then further down. And if this high holds, you got to remember it's not guaranteed that it will hold. So if it gets broken, we have to reevaluate because it might actually be. So I'm just reevaluating. This is the live technical analysis, right? This is the life of an analyst. Obviously I'm doing it live, so I'm actually just speaking my mind. I'm just looking at this, and I think I actually just looking at this again. I just want to double check a couple of things. All right, so rather than rushing through this is important. This is important. Gonna have to bear with me on this one. Let's just take our time for a second because I want to make sure. So weekly momentum is bearish. We want to be aware of that. But the daily momentum is bullish, right? That means short term we should see sideways to up, right? 3 to 5 days. 3 to 5 days. Pattern, right? I wasn't quite convinced with this wave 4, this 5, because it doesn't quite follow the structure. So what we seem to have, just looking at it, just in a more calmer fashion, is this is a bit more advanced, but most corrections are in 3 waves, and that's called a simple correction, A, B, C. Anything beyond 3 waves on a correction is referred to as a complex correction, but there is a common complex correction, which is an A, B, C, D, E. Now, a wave 4, the rules of Elliott wave is it should not close into the closing range of wave 1. And you can see it's tagged. It's tagged that line very, very clearly. You can see it clearly. A typical maximum for a wave 4, let me just get rid of these as well, because this is the whole point with technical analysis. It's not about being right or wrong, even though, you know, to make money, you need to be right. I get that, right? So we want to be right, so don't get me wrong there. However, you just have to read the information for what it is. So what I'm seeing here actually looks more likely to be a wave 1, a wave 2, a wave 3, as we saw before. But the wave 4 we was anticipating as an A, B, C, but because it formed this part here, that kind of confused the matter. But actually, just a complex correction. There's a thing called the principle of alternation, meaning when wave 2 is simple, wave 4 more often than not is complex. Right? So we can be aware of that. So actually, it looks more like this. So if I just put this here. By the way, you can skip this part. As in, if you want to get to the punchline, it will be in the timestamps. But I don't want to. Some of you are making decisions based on some of this. I want to make sure we get this as accurately as we can. So if this is the case, which it looks to be the case, we should actually anticipate another move to the upside, right? Another move to the upside. That's important. That's really, really important because this is the initial A, B, C. And so what we'll do is we'll project with high probability, because it's with the momentum as well. That's the important part of this analysis. As we measure this wave 3, project it from this wave, potential wave 4 low. I've got a question mark there deliberately. And a typical wave 5 is 62% to 100% of that zone. What we also want to be aware of is the external retracement. This is a confirming indicator. Measure wave 4, and the two numbers that we want is 1.618 and 1.272. You can see it's in that range, and that just tells us there's 2 price targets. And then last but not least, wave 5 more often than not has a direct relationship to wave 1. We measure wave 1. Oh, hold up. Let's do that again. I'm going to measure this wave 1 and project it forward from, but I'm going to do it like this, just a bit cleaner. I'm going to do it from here. It's just the way TradingView works. I'm going to project it forward to 1.618, and we'll see that the 100% is down here as well. So we can see that it's a very deep wave 4 correction, meaning that it's likely to not reach the highs, but we've got these 2 really clean price zones now. And then last but not least, we'll do the slightly bigger degree count. You'll see that the most common ABC correction is 100%. But you see that the 62% also comes into this range. We've got this really clean, 2 clean, really price targets. And then last but not least, this is this is a masterclass in compound, by the way. I don't know how well I'm explaining it, but it's important, very, very important. So I'm actually going to delete this stuff. This is a distraction right now. This, we can do that again later. The upside is what we want to be focused on, but to be very, very aware of what's likely to occur. So let's just measure this there to there. Boom, boom. And then the typical maximum is 100, and then the most higher than that is 1.618. So we've got these two zones now. All right, so let's wrap this one up. Let's wrap this one up. So what I'm trying to show you here is, I'm going to zoom in a bit more so you can really see it. Is we've got two zones. I think there's going to be a nice surge up over the next 2-3 days, and the two zones that we've got, we might get a fifth wave failure in this zone here. Then the maximum is up here, but that's quite far away. It's unlikely to reach that. Excuse me. It's more likely to be in this range, but we'll keep that in. We'll just keep it quite broad. Got kind of like this range here. So there you have it. Compound. Actually, you see that? We had to stay flexible and nimble there, because sometimes when you just see, sometimes you have to take the momentum helps you. What is the likely Elliott wave count, right? That the momentum helps you. So Elliott wave counts by themselves are helpful, but not that powerful. Momentum by itself is helpful, but not that powerful. Fibonacci basic retracements and extensions are helpful, but not that powerful. Time analysis by itself is helpful, but not that powerful. But when you combine momentum, price, time, pattern together, then you have something called a confluence of events. So it now gives you a holistic viewpoint of the market, and you want to use all of the information all of the time. That's a quote from WD again. It says, use all of the information all of the time. I believe it was him that said that. So what we should anticipate is a move to the upside to finish off this nice A, B, C correction. Taking longer is more of a sideways move, which is a bit of a sign of a bit more weakness. And then following that, that should coincide with the momentum. Then on a macro picture, if this occurs, we should be very aware that this move is likely to occur to finish off a bigger degree correction. Right? This is what we're looking at here, the bigger picture. The bigger picture. Most people miss the bigger picture. Right? And if this occurs this way, I try and do it so you can get a screenshot. Right? If it occurs this way, like this, and at this point, if that does happen, then we should expect the next move to the upside. Yeah, hopefully that makes sense. All right, jeez. I was trying to do that fast and punchy ones, but that's not happening today, is it? All right. So harmony. Last but not least, harmony set to 5x was the last video on the 10th of August we posted, and we said, look, move to the upside down here, and then this next surge we should anticipate. So we're gonna do an update with harmony, because that was bang on the money with this wave 2 holding. And let's just see what it's doing today. Look at this price movement. Oh, beautiful, beautiful. So this was the last analysis when the price was literally down here. And what we saw down here, if we just make this cleaner here, is, even if I get rid of this now, question mark still remains because it's not confirmed. I don't know why this is blue. I like to keep my text the same. There should be an intermediate count. Well, question mark still there because we haven't gone over this high over here or this high over here. But what we said the last time was we got this nice move up, and I think it tagged down to the 78.6% retracement. Look at this. Bang. Perfect. Look at that. Perfect. Textbook stuff. Textbook. It also hit time analysis. I can't remember if I did this the last time, but I can just tell by looking at it, it's going to be likely that it's in the time zone. Of the typical minimum 50% and the 100%. Look, bang on right there, right? So that was beautiful, beautiful that we saw that. So now what we're going to do is let's look at what's likely to occur next. So let's delete all of this stuff that's no longer relevant. Do you see the chart pattern? Let's just pull up the theory side of things, right? So I was just double checking that I'm recording. I've had it a couple of times where I recorded and I didn't record my screen. So I just had a moment where I was like, oh geez, is that the case? All right, so let's look at the theory. This is one of the things that I use in my masterclass and some of my courses. This is the theory. Elliott wave theory, right? This is what typically unfolds. Like it moves at 1, 2, 3, 4, 5, followed by an A, B, C. This is on a macro degree wave count, meaning like a larger picture. But the exact same thing applies on all time frames. So you can zoom in on a lesser degree time frame and you can zoom in again. So just snapshot this in your mind or visually or literally. You can screenshot it. And let's just jump back into the chart. For this part of the movement of the market, this is like just textbook. This is textbook. What do you see? Do you see it? What count do you see? All right, let's just pull this up again. Right? Do you see it? You must see it. This is like, doesn't get much better than this. Like, look at that. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It's like, you know, this is a great example of the practical and the theory. So just to make sure we're on the same page, let's write it out. Got this nice wave 1, wave 2, a nice wave, looks like a wave 3, a wave 4, and it looks like we're making this final wave 5, right? Hopefully that's clear to you. This is textbook stuff, textbook. Oh, look at that. Just look at that. Textbook, right? And with practice, you'll get, 50% of the time, chart patterns are as clear as this. And when it is, we want to use this information to help us manage our trades, our positions, our investments. Again, you want to take into account what type of investor are you? Are you a very long term? So then this intermediate wave count, these weekly waves that are going up and down, you can just ignore. But if you're in and out of the market on a day-to-day, week-by-week, month-by-month basis, then this is incredibly powerful. So what we're going to do today and finish up on this is harmony. Harmony. So we said, look, we did the video down here. Let's see the exact price. What was the price of the video? In the video, I'm short-sighted, so I got to look closely at my screen. It was, I think it was 7.8 cents, 0.078, right? So that was roughly around here. Price was around here. So when we did our last video, the price was around here, right? And what we were able to anticipate is that the likely move to the upside is going to be next. Boom, right? And look at this. It went from 0.078 to today's price. So it's done a 2x, right? 2x, not bad, right? 2x in the space of 3rd of August was the recording of the video. Sometimes I can't post the video on the same day, as in there's an editing process, so I apologize for that. That's why I'm trying to teach you my masterclass, Elliot with Fibonacci, learn how to do it for yourself. It's free, kind of gives you some really great information on how we're doing what I'm showing you here. So you don't have to rely on me. It's like, give a man a fish, feed him for a day, teach a man how to fish, feed him for a lifetime. So I'll hopefully teach you how to fish. I'm a vegan, so I don't fish no more. I don't fish. That's another conversation. All right, so let's get focused. If you need to skip to the end, it's in the timestamps. You can kind of go, boom, what's the conclusion? But now I'm going to show you the how and then the what. Okay, we've got a 5-wave structure, very beautiful. So there's very, very high probability when it unfolds like this. Let's just get rid of these waves because it's going to clean up the chart. Get rid of this. So we're doing 3 main things. First, we're going to do the main one for an end of wave 5. The main one. There's 2 main ones, but this is the main one. It's going to be a wave 1, beginning of wave 1, it's 3 clicks to the end of wave 3. And then a 3rd click at the bottom of wave 4. And the typical price range is, we've got it here, 62 to 100%, right? That's what these 2 lines are. Yeah. So again, this is leading indicators. We're projecting the future. We're not looking back in the mirror and saying, hey, this is what happened, guys. We're saying, look, this is what's likely to occur. So then, because you can't make money once the price is moved, you can't make money, right? But you want to be going out ahead. But again, it's probabilities. So that's number 1. Second, we're going to measure wave 1 this time. I'm going to do it over here, actually. I'm going to do it on the side. So I'm looking at the left, looking at the beginning of wave 1. In fact, let me do it like this. I'm going to show you this. It's like a mini masterclass. I can't help myself. I used to be a teacher and I can't help myself. So I'm going to measure this wave, and then we're going to project it forward from the low of this wave 4, or this wave 4, what looks like a wave 4. So we're going to get some lines over this region. So what I'm going to do is, oh, that's not the one, this one here. So we're going to measure this wave 1. There we go. Bear with me. There we go. Let's get rid of this. Make sure I've got the right click. Oh, all right, so that's third time lucky. All right, let's do this. Measure the wave 1. So I'm doing it this way because it keeps the chart clean when I do it more to the right, and it's easier to see what we're projecting. Well, and then we're going to project it forward from this wave 4. And you'll see it's in line with this arrow, right? That red line. But the two real numbers that we want, the most powerful is actually, in this case, is the 1.618 and the 100%. So now we've got these really two clean price targets. Wave 1 and wave 5 also have a time relationship. And I'm going to keep this basic. I say basic. There's different levels of analysis we can do. I'm just going to do, let's make sure that's there. I love one of your comments, by the way. Someone said, this is now one of their favorite channels. I said, why? She said, most people are doing, most people are playing checkers, Jagir, but you're playing chess. And I'm guessing they mean by going into this level of depth, which I appreciate. I'm also going to do this one here. I like to have a time range. Yeah, we'll keep it like this. It's not going to be that, that's not that important. In fact, I'm going to get rid of these actually. All right, let's just wrap this up. Let's wrap this up. All right, yeah, let's wrap this up. Okay, so compound. We've got this nice 1, 2, 3, 4, 5. We're on this final part of this wave 5. We are 2 time zones or 2 price zones. We've got this zone here, and we've got this zone here. We want to now be aware of a local high being made in the next bearish reversal on the daily chart, which will be up here and then down here, will probably coincide with this high being made either in this zone or in this zone, and we'll just leave it here for now. We can also look at, we know the weekly is bearish, the daily chart, sorry, the hourly chart. Let's just see if there's any information that can help us. Load up, bump, bump. So we had this amazing move to the upside on this recent move of this is harmony. Yeah, we're going to focus. So we've got this wave 4. This is the same information. But now look at this. I'm laughing at myself because my plan, which has failed miserably, was to do 3 coins so I can give you more coins and do it in the same amount of time. But I need to get better at getting more punchy, right? Look at this wave count. This wave count. Oh, look at this. This is beautiful. 1, 2, 3, 4. Yeah, so we might be actually closer to the end than I initially anticipated. So this wave count here looks like a wave 3, a wave 4, and a final wave 5 being made. So actually we might get there sooner than we anticipated. This wave 5 structure, yeah, so we want to be highly aware. Let's just wrap, because we're making a 5th wave diagonal here, is the next, let me just have a look. I'm going to put this here as well, 62%, which is important. It's likely to be a bit sooner than anticipated. There. And this one, let's do it like this for now. Yeah, I think that's the. So I'm just double checking what you want to be aware of. That's what I want to check. Just want to check the settings on this. This is the 8 yet. That's fine. So right, let's wrap up. You are more than likely going to see a high being made very soon with harmony. Doesn't mean anything about the project. Price does not reflect the project. Price is just short-term voting based on speculation, based on making money. Yeah, buy low, sell high, right? And people that got in low, especially even short-term traders and investors down here, you know, that was around 5 cents. They're 2-3x up, right? So exit, and then market is likely to do a 3-wave correction. Just be aware of that. That's what we should anticipate coming next in 3 waves. We'll cover that in a future video. But right now, we're going to be on high alert. Harmony, bang on the money over here. We said, look, making a microwave 2, bump, move to the upside. We've got this beautiful 5-wave sequence. This here, 1, 2, 3, 4, textbook. And then this final 5, and then we should anticipate this correction, this ABC correction that's more than likely. Look at this. This is just the theory and the practical. This is what I'm showing you. right? So if you like today's video, we covered a lot today. I was hoping to do it faster, but that's life, right? Like, subscribe, hit the bell notification. What did you find most helpful today? We covered 3, right? We covered compound, harmony, and Dogecoin. Which one did you find most useful? So, oh, sorry, one last thing. Jeez. So I like to do this because if you're not versed in this space, you can be very susceptible to human emotions. Yeah, fear and greed, fear of missing out. And when you're seeing other things explode, you're like, why is my token not exploding? Why is my harmony not 10xing and 20xing and making me rich? So on and so forth. So what we should anticipate after this correction, this natural, healthy breather, right? We need harmony to have a breather. And then there's an aggressive move to the upside. It's a strong, fundamentally strong project. But from a technical standpoint, this is what we should expect, right? And there you have it. Harmony, Dogecoin, compound. Which was your favorite? Like, subscribe, hit the bell notification. Take the free Elliot Wave Fibonacci Masterclass because it covers this, exactly this, how to do it. And then I have some courses. I've made them really cheap, so you can really do a deep dive if you wish to do so. And I'll cover some other stuff also. So let's finish on a quote. Now let's jump to chapter 5. It's Simple was the name of the chapter. And it's a brilliant quote, one of my favorites, one of the ones that I use in my life so often. Simplicity is the ultimate sophistication. Simplicity is the ultimate sophistication. That was from Leonardo da Vinci. Now, my team in my company, they say, Jigir, one of your superpowers is simplifying. So my job is part of it is to simplify, because Elliott wave and Fibonacci and momentum indicators and technical analysis can be and is very complicated. But just remember, everything is difficult before it's easy. But my job is to help you simplify it. So do take the masterclass because I've simplified a lot of things. It took me years and years learning, flying around the globe, learning from some of the world's best, reading countless books, making my mistakes over the decades. But now we've got it down to a point, and you're seeing it in the analysis. This is no joke, where we're projecting in advance with high probability. And remember, it's probability, not certainty. It doesn't mean it's going to happen, it just means it's likely to happen. But it allows you to have proper risk management and have a strategy so you can be consistent in your approach. And when you're consistent in your approach, that's how the pros make money. So if you like today's video, like, subscribe, hit the bell notification, and I will see you soon.